Hi guys, welcome to our YouTube channel Victory Education. So today in this video we are going to study the chapter 1, that is Introduction to Accounting, and this is part 1 of this video. So let's begin with the meaning. So what is the meaning of accounting? Accounting is a process of identifying, measuring, recording and communicating the required information relating to the economic events of an organization to the interested users of such information. Okay, so before understanding the meaning, we have to understand the key terms of it, which I have underlined, that are identifying, measuring, recording, communicating. What do you mean by economic events? What is an organization? And who are the interested users of such information? So let's begin with the economic events then. So what is an economic event? It is a happening of consequence to a business organization which consists of transactions and which are measurable in monetary terms. Suppose there is an event. How do we recognize that event is an economic event or not? In terms of monetary. That means in terms of financial character. Let's say an example. Purchase of machine. So what do you mean by the purchase of machine? That we are purchasing a machine with the exchange of money. So this is an economic event because it is of financial character and it has number of financial transactions such as buying a machine, transportation of machine, installation charges and etc. So let's consider the death of a partner. So the death of a partner, is it the economic event? No, it is not an economic event because it does not involve any financial character. That is, it does not involve any monetary terms in it, and hence it is not an economic event. So there is a note to be understand that economic events are recorded in books of account. Okay, only the economic events are recorded in books of account. Okay, so let's begin with the types here. So in economic event there are two types, that is external event and internal event. Okay, so external event is that the transactions are between an organization and an outsider. Okay, so let's say for example there is a customer. Okay, customer is an outsider to an organization, while organization, that is the goods are of organizations. So the exchange of customers, that is the goods of the organization and the customer is purchasing it. So here the customer is an outsider and the organization's goods are the inside. So that's the transaction of external event. So what do you mean by internal event then? So involves transactions between an organization and insider. So let's say for this an example is the best example is the employees. So employees are the workers or the insiders of an organization, and for them the daily wages or the salary is paid by the organization. To whom? To the employees. Employees are inside the organization and organization pays them wages or salary. So that is the transaction of money and it involves within the organization. This is called as internal event. So next. So let's begin with the terms of further, that is the identification. So what do you mean by identification? Identification is that determining what transactions to record. Okay, what transactions to record? Only the economic events, that involves the monetary transactions. Observing activities and selecting those events that are of financial character and relate to the organization. Okay, the activity should be of financial character. I have explained previously that economic event should be recorded in the books of account and that should be related to the organization, not outside the organization. We have to record the activities which are related to the organization and which are of financial character. Okay, that's the identification. So next is measurement. So after identification, how we gonna measure the monetary unit? The basic thing we measure any monetary unit is of rupees or sometimes paise. Okay, that is the quantification of business transactions here. So many of the business transactions are quantified in the rupees and dollars depending upon the organization. Okay, the next is recording. So recording is after identification and after the measurement we have to record it. What we have to record? The activities of business transactions in the books of account in monetary terms and in chronological order. Chronological order in the sense of the timeline. Timeline means whether, see for example in May the transaction is involving, so we have to go May and then after we have to go the June transactions, not directly to December transactions. Okay, so not So that's the way chronological order by the timeline. Okay. So next is communication. So here the communication means after recording the books of account, we have to communicate the accounting reports. To whom I will say the next part. So reports can be communicated daily, weekly, monthly, or yearly depending on the organization. Okay. So next is, what do you mean by an organization? So the business organization is nothing but a business, whether for profit or not for profit. Not for profit organizations are such as NGOs and all, and business are of sole proprietary, partnership, and joint stock company, and so on and so forth. Okay. So next is, who are the interested users? And now this is the main here. Who are the interested users? The interested users are of two types. One is internal users and next is external users. Internal users are those like chief executive, financial advisor, vice president, managers, and etc. External users are shareholders, creditors, tax authorities, customers, labor unions. Okay. So why do they need information? Like shareholders, I said. So shareholders come in the external users. They need information to assess the financial health of their business or the company, to see if they are getting enough return or not for their investment. So the managers or directors need information to evaluate the performance and to ascertain the strengths and weaknesses. From that they are going to make the decision making further. Okay. So why creditors? Why do the creditors need information of a company? Creditors in the sense the financial institutions or the banks. So they need information because they want to know that if we have the ability to pay the debts or not. Okay, when they are due. And why do tax authorities need information? Obviously for payment of various taxes like value added tax, VAT, income tax, IT, and so on and so forth. So accounting information should ensure. Okay, the information has some points here. I'm going to discuss it right now. Okay. So information for making economic decision. So the accounting information should be such that from that information we are able to make the economic decisions for the company or the business. Serve users who rely on financial statements. For example, the financial advisors of a company, CEO and CFOs rely totally on the financial statements because they want to know the strengths and weaknesses of the company, and from that the strengths and weaknesses they are going to make the decision making process. So accounting information should serve those persons. Okay. So next is provide information useful for predicting and evaluating the amount, timing, and uncertainty of cash flows. Accounting information should also be useful for predicting and evaluating the amount. I mean the future uncertainties we have to, like future cash flows and timing and predicting all those things. Okay. Next, provide factual and interpretative information. Accounting information should also provide the factual information with enough of data and all. Okay. Provide information on activities affecting the society. If the any of the activities of business which is affecting the society, the accounting information should also provide that information to the users. So next is branches of accounting. So branches of accounting are of three types, that is financial accounting, cost accounting, and management accounting. So we are going to study one by one. In financial accounting, ascertain the profit and financial position of a company. So the financial accounting is totally rely on the profit, whether the company is making profit or not, and what is the exact financial position of a company. So this can be ascertained by making the journal, ledger, and trial balance here. So next, what is cost accounting? A cost accounting is ascertained to cost of goods produced or services rendered by company. Okay. So it can be the accounts here are cost sheet, material cost, and etc. So what is management accounting then? Management accounting supplies relevant information at right time to the management to enable decision making and effective control. It involves like analysis. For example, trend analysis is there, a ratio analysis, cash flow statement analysis. From that, all those analysis, the company is going to make the decision making and exercise effective control of the business. Okay, today the scope of accounting has become so vast that new areas have emerged, like human resource accounting, social accounting, responsibility accounting. Okay, uh, I hope you have understood all these concepts clearly. That completes our first part of the video. For the coming parts, make sure you subscribe to our channel and hit the bell icon, and also like our videos. Thank you for watching.